Yes, my people, welcome back to the channel. Hope you guys are all doing good. Now, in today's episode, I'm going to be going over this trade here, which I managed to catch on EURUSD. Now, this trade over here managed to secure me another payout with Breakthrough Capital, and it also managed to get me another 200k in funding with Conteco. Now, if you guys don't know, make sure you guys go check out Breakthrough Capital for all of your prop firm accounts. This is personally the prop firm that I've been trading with for a minute now. They paid me out consistently. They've got amazing market conditions, and I'd highly recommend them overall. Also, make sure you guys use code CAPITAL30 for 30% off all evaluations. And before I go ahead and actually break this trade down, I know I say this 1,000 times every single video, but make sure you guys go ahead and join this free Discord server. Link will be in the description. We've hosted plenty of giveaways. It's actually insane. So with that being said, now we can go ahead and actually break this trade down. Now, I always start off doing a top-down analysis, and I slowly scale down to these lower time frames, and I wait for everything to align. Now, if you guys don't use high time frame bias, make sure you implement it. I don't care if your trading strategy is already working for you. If you implement high time frame bias, I promise you your trading win rate will go over the roof. Your risk reward will probably increase, and you'll have so much more confidence when you're actually taking these trade setups. Now, starting off on EURUSD, as you guys can see on the weekly time frame, we have tapped into this weekly imbalance, and we have respected it. This huge wick over here is showing me rejection. And same thing on the daily time frame. The daily time frame is also respecting this smaller imbalance here. So as you guys can see straight away, the daily and the weekly time frame are both indicating to me that we're going to sell off on EURUSD. Now again, same thing on the 4-hour time frame. If we read the finer details of price, what has price done? This looks like a clean form of AMD as well. You guys can see we have a clean form of accumulation over here. This could potentially be a manipulation move before we get a distribution move lower. And even if my bias is wrong here, the beauty about lower time frame trading is I can still catch a quick move. All I need is 20-30 pips and I'm in and out of the markets. Whereas with higher time frame trading, you'd have to hold this position for hours first of all. And second thing, you could be right about majority of the position, but if it starts reversing maybe at this order block area over here, then all of a sudden you've made no money because you have to catch such a big move. Does that make sense? And that is the beauty about my strategy. Again, with the 4-hour time frame, you guys can see these bullish fair value gaps here are being disrespected. This is indicating to me that bearish pressure is in the market. Now, if we scale down to the lower time frame, remember in the other episode where I told you guys something called propulsion, where price creates an order block, taps into this order block, creates another order block sort of area over here. I know this is 2 candles, but this will just be a 30-minute order block. Let's just check. You guys can see 30-minute order block, but nevertheless, price taps into this order block, creates another order block, and you guys get the pattern. This is called propulsion. Now, this is indicating to me that order flow is bearish, right? Sellers are in control of the market. And in very simple terms, what really is this? We're just simply making lower lows and lower highs. So when the market starts to retrace, I'm expecting that same exact thing. Now, you guys can see here, we have a 15-minute order block with liquidity just inside of it. And we know order blocks have to get mitigated, just like imbalances. So this liquidity over here, in my eyes, this look like a tap to invite in early sellers and sort of generate this sort of trend line over here. Now, you guys see, what does the market do? The market goes ahead and takes out the Asia high. Now, automatically, due to swing traders are looking to get into the market, what ends up happening is we get a market structure shift. And what happens to these set of traders? They get taken out. Now, cool, let's just say due to swing traders would look at this as, oh, maybe they entered too early. Let's take another re-entry. The market gives them more confirmation, right? You guys can see we get another market structure shift towards the downside. And now they're thinking, cool, it's London open. All the volatility is kicking in. Maybe I entered way too early back here. So if I take this entry off of this imbalance, I might actually get this trade idea right. And if I go ahead and obviously target Asia low like they always do, what ends up happening to these lot all get taken out of the market. So now what has the market done? The market has taken liquidity once. The market has taken liquidity twice and 3 times on the lower time frame. And on the bigger picture of things, it's taken this point of liquidity over here. Now with my trading strategy, I like to wait for everyone to get taken out, all of the early buyers and sellers to get taken out, and then I can start looking for my entries. This way I avoid being these early buyers and sellers that end up getting taken out. So what does the market go ahead and do? You guys can see the market ends up slowly selling off. Now notice another thing, on London Open we had this huge rally up. This is a form of manipulation. I always tell this to all of my students on session openings, whether it be London session or New York session, look for a run of liquidity because that is usually the manipulation move of the session. Why is this? Because on every session opening there's an increase of volatility, and because of that increase in volatility the market usually likes to manipulate. So automatically buyers will be looking to enter off of this zone over here. So what does the market do? It gives them that reaction, and you guys can see it gives them a quick reaction as well. Let's just say they was to wait for confirmation and maybe an internal breaker structure, they get that. And another thing as well, notice how the market quickly moves in one direction. This invites in FOMO traders that get the fear of missing out, and they're looking at this quick reaction and they're thinking, yo, I gotta get in. They start entering the market and they enter buys, and what do? They're placing their stop losses here. Notice one thing as well, if we just zoom out and look at the bigger picture of things, what has the market done? The market has sort of generated all of this liquidity down here, this sort of trend line that was forming here, and what a coincidence, it touches the trend line again, gives this quick reaction to inviting all of these traders. However, this is where you have to trade objectively. Because of my higher time frame bias, because I know that the market is more bearish, I've simply seen that price end up tapping into this 1-minute order block down here. And for me, this was just simply another retracement into an order block before we go ahead and establish them lower lows and lower highs. Another thing as well, notice how on the lower time frame there's also propulsion. Price creates an order block over here, taps the order block, creates another order block, taps the order block, sells off, creates another order block with did you get the point? So in this case over here, I wanted to wait for some sort of confirmation to enter off of this point of interest. And as you guys can see, when the market ended up disrespecting this bearish fair value gap, this created something called an inversion fair value gap. Now I can see here, like physically looking at the charts, that the market established a high, a low, a lower high. It failed to go higher. If this move over here was really the expansion of the session, that looks a bit weird, but ignore that, then surely we should have continued to make higher highs and higher lows. Instead we failed to do that. So as soon as I see this, I take a manual entry somewhere around here. I put my stop loss on this high over here, and for my take profit, I had to be realistic. realistic. Now, as you guys see, the market had this order block down here. Now this move here was more than enough for me to pass my funded account and secure a payout. The London low was my first take profit, where I ended up cashing out manually on one of my accounts, and this order block all the way down here was my second take profit, which ended up passing me my funded account. And you guys see straight after that, what does the market end up doing? The market ends up reversing and starting to basically go through a lot of turbulence. Now yes, although this day I could have went ahead and targeted Asia low and caught a crazy risk reward 1 to 20. For me personally, I wanted to play it safe. It was a Monday, no news. I wasn't really expecting this kind of volatility in the market. And you guys can see, if we get out of replay mode and go back to that day, during the London session, we ended up doing 100 pips. If I'm being honest, I didn't expect it. But because obviously Trump and all of his tariffs and whatever he's doing, naturally there has been a huge spike in volatility in the market. Now this is a very simple breakdown of this trade I took here. Now if you guys want the full information on how I actually caught this trade setup and all of the other conferences I used, and full details on my trading strategy, then make sure you guys go ahead and check out the link in the description. That way you guys can get access to my strategy, daily markups, resources, psychology calls, multiple weekly calls, and a free ebook. Like I said, once again, make sure you guys go ahead and check out the link in the description. With that being said, I hope you guys have enjoyed this video. Hope you guys have learned something new. Also, if any of you guys have got this far, just comment the word, I don't know, black background or something. I just want to see how many of you guys actually got this far in the video. With that being said, it's been your boy on Forex. Take care, my people.